CMZTrades. Welcome. Welcome to CMZTrades. Folks, it's good to be back for another episode of CMZTrades. How is everyone doing today? We have a lot to cover. We are on trade number, drum roll please, trade number 35 of 100. The 100 trade backtesting series. And we are on trade 35. I think we started this series on trade like 27, 26 or 27. So we've almost done 7 going on 10 trades in 5 episodes. Last episode was a long one, but possibly the best episode yet. We are dropping absolute gems on this channel. I am learning a lot. I hope you are too. With that being said, let's take a look at the charts. On the charts, what do we see here? We have price action that just did an enormous pump. I mean, what are we talking about here? 140, almost 150. Well, yeah, 150. Look at that. 158. 158 ticks. Pumped in about 6 hours. Maybe even less, 3 to 4 hours. We took this trade right here. If you saw the last stream, you know that some of this is where we moved our stop loss up. But really, our entry, let's see, our stop for real was like down here. And our entry, no wait, our stop was like right here, folks. Below this right here. This wick over here. Yeah, it was like a, I feel like it was even closer than that though. Low key, I think it was right there. Because it was like a $500 risk. And we ended up taking profit up here. And we got out on this candle. And then we watched her pump again, but then ultimately come right back down, and it would have stopped us out of our trade if we did not manage our trade, which is why we have started developing trading plan, new rules, backtesting etiquette, and millionaire etiquette. This was not obvious in my trading plan, in my trading strategy, until last episode. Now we must have, as part of our entry criteria, we must have a defensive risk stop loss. That implies our stop can't just randomly be anywhere. It has to be at a position of power. You know, below here, below this beautiful curvature. If price wants to get back below there, we'll let them have our money. But when you see some nice curvature like this, you take that risk that the bulls are going to show up. They're going to, folks, you're not the only one out here getting FOMO. The FOMO kicks in so heavy before where you would put your stop loss. That's what you're banking on. Now, every now and again, a much bigger player wants to get in. They want to put in their millions. They're not like us who just want to put in one or two contracts. They want to put in 50. They want to put in 100, maybe even 200 contracts. They see this move happening right here. So they push the price down, and if it was necessary to create the liquidity so that they can be along for the ride. That's some of my understanding. I'm sure there are 100 other reasons why the market moves the way it does, but that works for me for now. And my strategy allows for that level of thinking. For right or wrong, it makes sense. I'm open-minded to hearing other angles. But at the end of the day, what matters? What matters is we have a strategy, we've documented it, and we're not married to it. But for as long as it says what it says, we follow it until we have evidence that makes sense that we should change it, update it, add to it. Then we do that. But if we just randomly are making decisions on the fly about how to trade and we're not documenting it, this is something I like to call validation through documentation. It's part of the scientific method. If you want to study something, you need to be able to repeat it over and over again. That means you have to follow the same steps exactly over and over again. Otherwise, you're going to mess up the experiment. Okay, so this is the trade we took last, and it helped us recuperate much of our losses. We are still, to compare whether we're down over the last 3 days or 2 days or not, that stuff, it gets too particular. We really want to just leave it to weekly and monthly at this particular time. Because when we start measuring, we got our money back from the last 2 trades, we run the risk of actually believing that matters, because it doesn't. All that matters is following your trading plan and looking at the results after 1 week, after 2 weeks, after 1 month, after 2 months. That's where the trading plan really tells you, is it working or not? Not after 2 trades, after 3 trades, after 4 trades. That's not the way to do it. You're going to get tunnel vision and you're going to start making changes, and you're not giving your strategy enough time to demonstrate what it can do for you over time. And so That's something we're doing on this channel. That's why we're doing the 100 trade backtesting challenge. Absolutely. Let's look at the dashboard. 86.50 in profit for the month of August here in 2024. Historic price data. This is old price data from last year. We're simulating the charts and we're trading based off of how we would trade it if it was real time. There's going to be some differences. I can go have lunch and come back and not a minute has passed because we're simulating. I have to hit the button in order for it to go forward. So that's not real life, but that's why we don't want to cheat ourselves. We have to be careful not to cheat ourselves. Based on the real experience, we'll find ways to incorporate real decisions the best we can. But this is definitely going to help us build confidence in our strategy, in our plan. And it's poking holes in it, right? We're finding ways to protect our money. Look, let me get this off the screen here for you. So there you go, 86.50, profit factor 1.5. And look, this big dip right here, this was the first week right here of trading. I was up almost 6K in the first 2 days. And then I just had, what is this? 3, 4, 5, 6, 7, like $7,000 losing streak here over the rest of that first week. And because I was journaling, I could really see what was going on. And I was taking trades that I couldn't justify based off of my entry criteria and everything else. And so then I figured, okay, I have to really know why I'm getting in this trade to the point where I can write it out. If I can't write it out before I get in the trade, then I'm fooling myself and I'm trading based on emotion instead of based on my plan. So that was a first week lesson, looking in the mirror. The market is a mirror, but only if you take time to reflect. If you just keep on moving forward and taking swings at everything, but you don't take time to reflect, then it's a one-way mirror. Like when the authorities have you in the room, you can't see them, but they can see you. You don't want the market to have you behind a one-way mirror, and you can see the market, but you can't see yourself. You know what I'm saying? You get the market in the room. On the other side, you're looking at it. You're taking swings, but you're not taking the time to really look at yourself. Why did you do it? Why did you lose the trade? Why did you win that trade? If you're just taking swings and then you're excited after you win and you're disappointed after a loss, you shouldn't be riding that roller coaster too hard. Like, it shouldn't be an intense feeling of joy and an intense feeling of agony. That is a symptom of not having a trading plan that you respect enough to follow. Because once you have a trading plan, a loss and a win is just a data point. Like this 8600 here. Yeah, there's a part of me that says, this is the first time I've done this, folks. This is the first time I've really used TradeZella and everything, and I wanted to share it with the world. I feel like I'm ready to get out there and present in front of everyone so that you can follow on this journey, because I know where I'm at right now. It's where complete newbies want to be, and it's where it's like in that no man's land between, I know I'm not a complete noob anymore, but I'm also not really mentally prepared, or nor do I have the confidence of a history of winning and being profitable that I'm really ready to take that leap. So this is what that middle ground looks like, feels like, and this is how we get to the next level of professional day trader, where we could, within a year from now, maybe even by the end of this year, 2025, it's August now, by Christmas, I could have a brand new car paid for from trading success. That's how it feels. But I can't go faster than where I'm at. I have to make sure I'm in the moment and I really get the self-reflection, the trading plan development tight. It's got to be very familiar. Your trading plan, your strategy, when you look at a chart, we should not be seeing 5 different ways to trade as apprentices in this game, as journeymen. We're not, there's all these different strategies out there, and I'm not going to start naming them. We're not ready to talk about all that. Have a strategy, have a plan, document it. It won't be perfect. It's not supposed to be when you first document it. When you document it, it's you making the decision that this is the plan you chose, and it's the one that you choose to follow. It's the flag that you're going to wave. It's the team that you're going to support. Then you're going to see other people waving the flag, other people with their team strategy, and they're going to be having success. And it's going to look enticing, like I should switch strategies. But it's just like a diet plan. Everybody's got a diet plan. Oh, you should do keto. Oh, you should do, what is it called? Paleo. Oh, you should do low carb. Oh, you should do, just count your calories. Just measure everything. Just make sure you're walking 8,000 steps a day. This person says 10,000 steps a day. This person says you don't have to walk at all. Just make sure you're lifting weights. Just make sure you're staying active. Another person says. So who's right? The thing is they're all effective ways to reach your goal to lose weight. But if you hop around, you go a couple of weeks with low carb, and then you switch and you start eating carbs, and you're like, I don't need that. I just need to walk 8,000 steps. And then you start walking 8,000 steps, but you're eating the carbs, and then you give that 2 weeks. 2 weeks is not enough time. You have to give things months to play out. Okay. So here on this channel, we are all about the MarketCipher Basic Strategy. MarketCipher is this indicator down here. This is called MarketCipher B. What you see on the candles up here, the yellow X's, the red diamond with an X, these little red X's, these like red diamonds, the smaller version, the blue triangle, the green dot right here, the yellow diamond. This stuff is not a TradingView presentation. This is not something that just happens in TradingView. It's part of MarketCipher A up here, and then down here is MarketCipher B. This strategy is called the MarketCipher Basic Strategy, where the blue waves, that is your momentum, the speed at which things are happening. When the speed lowers, when momentum starts to lower, price wants to tend to trend downward. When momentum is getting picked back up higher and then higher again, the case for a pump becomes likely. By itself, you wouldn't want to just trade it by itself that way, because, like here, lower, and then lower, and then lower momentum, but then price launches up. It does have like this dip, so you could say like this momentum, it ate it up right here, and then this trigger wave, because you also have momentum coming up. So how did price respond? MarketCipher saw both, but how do you know which way to trade it? And the answer to that is, you're not going to use just one indicator. You're going to use the blue waves. You're going to use this green to red. See, green to red, green to red. That's money flow. So money coming into an asset, money leaving an asset. It's like rain. It's like water to a garden. When water comes into a garden, the price can grow. When water leaves the garden, the price comes down. You see that here. Price coming down. Money flow leaving. Money flow coming up. Price going up. That's how we took the trade in the last stream. We were in this short. Actually, I think we got into short like somewhere around here. We took this short, and then we got out, somewhere like right here. We noticed price was moving sideways. We were hoping that it would break out. We was hoping it would kind of break below this local support here, these bottom candles, and continue down. That was the short, that was the bearish. But when we saw in MarketCipher, the money flow stopped going down and it started to come back up, like right here, look, that's where we entered the trade. We saw momentum leaving, but then it started to come back up. Again, right here. That's where we entered the trade. We saw RSIs, these lines right here. You get one that turns red and green. and then one that stays purple. It's the RSI, and then there's the relative strength index. So it's just, there's some nerd stuff behind that. I don't know it, even though I'm a bit of a nerd myself. I haven't cracked the code, nor do I understand the math of what determines a relative strength index. I just trust that whoever did invent the math, I trust their tool. Just like I trust my car to do what it's supposed to do when I'm driving it down the road. But do not ask me to fix your car. And then you got one called the stochastic. And I have no idea what that word even means. But what I do know is that when these two are pointing downwards, and especially when the red-green one is red, it's a bearish sentiment. You combine that with momentum lowering, you combine that with money flow leaving, and you got yourself a short. Boom. This is MarketCipher Basic Strategy when we find 1, 2, 3. Wait, let me recount. Like if we're finding a down, we got 1, momentum, 2, money flow, 3, our RSIs, and then this yellow here that's kind of like in behind the money flow, that's the VWAP, volume weighted average price. So basically the average price that the asset is being traded, whether that price is increasing or decreasing. If it's increasing, well, then the price of the asset's going to go up. If it's decreasing, it's going to go down because it's being sold for lower on average. And when you combine 1, momentum, 2, money flow, 3, VWAP, 4, stochastic, what you end up with is 4 indicators that could line up. That is a lot of confluence. And when you combine it with price being near a support or resistance, that's a 5th level of confluence. And that is what we're doing on this channel. We're looking at those 5 premium confluence indicators. And that's the MarketCipher Basic Strategy. And you can see right here, price was coming down, came to a local support, found support. We saw money flow coming up. We saw momentum coming up. And we saw our RSIs green. And when they get tight like this, that means they're strong and they're ready to make a move. Typically, in this situation, the move is going to be up. If they're low, it means it's relatively oversold, which means people are going to buy it up. And when they're high, it's relatively overbought, and you're looking for a short. So that's the name of the game. As far as VWAP's concerned, yeah, we can see VWAP coming up right there. Let's just zoom in real quick so you can really see if I can. Here we go. Let's get a closer look at that. So we can see it all right here. Money flow came down. It's coming back up. VWAP came down. She's coming back up. It's choppy, but this, you know, sometimes you're going to see chop when there's a fight. There's a fight happening. But because the money flow is coming up, money flow rules. The money flow is the most powerful indication out of the four. And then I really love these RSIs. When we see them tight like this and money flows coming up, all that's really left for me is to look for a momentum entry. I want to see the momentum low because I know the momentum's about to spike. And price is going to spike along with it. And that's how we took this trade right here. All right. You know, if you wanted to get this short, there it was right there. Money flow is just the complete opposite. It was coming right here. Boom. This was when, you know, we would have been looking for a short, and then I would have waited for some kind of momentum clue. Boom. RSIs splitting to the downside, trigger wave to the downside, money flow leaving. I would have gotten a short here, stop loss behind here, and easy money. That would have been 120 ticks in, you know, an hour and a half. That's what we're doing. That's what we're doing on this channel. And if we're doing anything else, if you see me trading anything else, it's because I'm experiencing some level of emotion, typically FOMO. You know, you start worrying you're going to miss out, like right here. If we saw money flow leaving and then we saw this low momentum, and if I got in a trade right here, like, oh my gosh, I can't miss this. And then, you know, we're in a trade here, and yeah, we get in a little bit of profit, and then we're like, no, oh my gosh, were we wrong? And then, you know, it probably would take out our stop loss and then make the move, and now we're upset. So patience. When you see the move coming, that's the easy part. Having the patience to wait for that opportunity to get a seat on the ride. I think for me, that's been the hardest point of trading in this particular phase that I'm in, this journeyman phase that I'm in. There's the learning fundamentals phase, and then there's the practice and fall on your face because you think you can outsmart the market and you're just smarter than other people, so you're not going to have the same problems everybody else does. And then after the market beats you into submission and you finally get hammered to the ground enough times that you essentially say, okay, I give up. Teach me how to trade. Even though you learned the fundamentals to the point you thought you could trade, you have to get beaten up by the market enough to truly accept there's something you're still missing. I've went through that for the past 4 years. Now between like year 4 and 5, here, that's what you're seeing on this channel. You're seeing me use what these masters of trading have learned and what they're sharing. I mean, you see it in all these trading shorts, in everything else that you see online. They're all saying the same thing. You're just not hearing it because you're not ready to hear it. Okay. But if you're here on this channel, you're ready to hear it, because that's where we're at. That's the audience that I'm making this content for, as it were. And it's where I'm at. I've heard the call. I've succeeded and yielded to the power of the market. She is not to be taken for granted, disrespected, or underestimated. She will take your money if you're not mentally prepared and disciplined and patient to participate in possibly one of the greatest wealth generating skill sets the world has ever seen. I want to thank you for being here. CMZTrades. Okay. That was a great introduction. So, we know that we took this trade in the last stream. What are we going to do this stream? We're going to do what we always do. We're going to trade. That's what we're here for. Now, after our last trade was over, what we decided to do was fast forward, simulating basically the time that we would, sleep. So we got out of the trade here at like 3:30 a.m. And then we decided, hey, we're going to sleep for the next 6.5 hours. You know what? I need more sleep than that. Realistically, we're going to sleep 7.5 hours. Let's go ahead, fast forward it. We're asleep. We can't do anything about it. And then we get here. And really, we're just waking up and getting our coffee. And then we're going to come look at the charts. So that's where we're at. Let's start with the daily and see what Monday, August 26th, 11 a.m. looked like. I mean, she's been bullish since October 2023. She's had her dips, but then she comes back strong. We got a nice slingshot. Got a nice slingshot action pattern. Came down, but then it came right back. This is also something we refer to as Jesus take the wheel. Hands up. Jesus take the wheel. Price comes down and then wham, comes back with a vengeance. Now this is months ago, back in May. Here, what do we see? VWAP ever slightly increasing from July to August, over the last month. What else do we see? RSIs are tight. We see this VWAP here came up, boom, price launched. Could we get another one? VWAP come up, price launch, you know, could we see some continuation up through September? Something like that. Case in point, daily's bullish. We are intraday traders, so we don't spend a lot of time analyzing the higher time frames. We just want to see which way they're pointing. Kind of like, you know, I grew up in the country, and my grandpa used to have on the barn one of those rooster devices that would turn depending on which way the wind was blowing. And you know, it's just a way to see which way the wind's blowing. I guess, you know, farmers and stuff, that's pretty important information. And that's, you know, the wind can change from hour to hour, from day to day. But as intraday traders, you know, we just want to know, where is it pointing right now? And does it line up with our trading plan? Because we will ride with the wind until it starts changing, and then we're out. That's what we do. 12-hour trigger going into August. Pump. Could we have kind of like a little head and shoulders action here? Maybe. Money flows choppy, but still got a potential for some juice. These higher time frames. Here's what we really know. The gates are open. Last we checked, the volume weighted price action was moving higher. As far as the 12 hours concerned, that could continue all the way to the next frame, which would be 3 p.m. And for context, it's currently 11 a.m. So that'd be like 4 hours until we get a new. So that's kind of towards the end. But 4 hours on the 12, you know, we'll just document it. It is what it is for right now. We might want to wait and see what the 12-hour, where she points. What did I say? Till 3 p.m. All right, that's something. 6 hour. Six hour, same thing, 3 p.m. we get a new one. And she's open. RSIs are pointing down. I mean, we're really kind of probably moving sideways, because we want to know what 3 p.m. Oh, yeah, that's right. We're pretty close at this point to markets closing at 3 p.m. So as it were, we don't take a trade. Folks, I don't trade. If I'm not in a trade by 11:30, especially, I'm not taking a trade, because by like 1:30, you're going to get flattened by the prop firm. If it was my own money, maybe I'd take a trade over these two hours here, but probably not. It'd have to be a really confident trade that I thought was going to fire off and make a quick move. What I'm saying in short, we're going to fast forward to Monday 3 p.m. Folks, we basically came to the charts after we woke up. We looked at the 12-hour, the 6-hour, and we can give the 4-hour a look. And we're saying to ourselves, the next frame for all of our higher time frames is only a few hours away. And it's at the end of the day, the trading day. going into a new trading day. Therefore, we're not trading. And then we go do something else. So I'm going to fast forward. There's no reason to look at anything else. Higher time frames are the first price action, indicators. They are our most confident way to get a read on market direction. So we want to start with them off on a good foot. Looks like price wants to dump some here. And do you see how tempting that is? Don't get me wrong, we are not trading until we see what's going on in this new day. I just want to get on the 5-minute so we can watch this play out. Nice tight RSIs. There's a lot of sideways action. Usually you're about to see why most likely we don't want to be in a trade here, and why by like 1 o'clock, 1:15, prop firms flatten your trade, because typically there's like spikes in volume. All right, not today. So we're going into the new day, which means we have new frames. So let's go give them a look. Daily. Oh, daily red dot. That can change throughout the day, but new frame, we're off to the start. A red dot. Monday. So Monday, 3 p.m., we opened up with a red dot. There's that potential head and shoulders on the momentum. Money flow leaving. But it could be Thursday before it makes a really big move down. So that doesn't mean it's just going to jump down. It just means we're getting a general idea where the market might go today. Right now, we got bear pressure on the higher time frames. 6 hour, bear pressure is there. You know what? We just started this day. I'm going to give it 1 hour to let all these New York traders start placing their trades and give us more data. So right now, we need to know, can those indications, those frames last even an hour? Because they could change very quickly. So we're going to go until we get a new frame here. There it is, new frame. And it continued downwards. So, yep, 8 hours about to clip. 6 hour VWAP's coming down. Money flow is still pretty strong. Trigger wave here. She could be coming down for the next few hours. Let's see. 3. Yep, 3's confirmed. We got the red dot and then confirm. We're gonna say 3 hour is bearish up to 6 p.m. Wait, let's do 6 hour. I like to do really high time frames here. So I think all the way to 9 p.m. 6 hours bearish. You know, 12 hours bearish too, but because it's so new, I'm trying to reference a lower, higher time frame. I know I changed there. Okay, it just changed. All right, 2 hour. Money flows leaving, that's key. We had this huge drop and then a pump right after it. You know, no real time to create trigger entries for some folks. Like right here, huge pump, comes create a trigger, and then pumps again. I think she might want to come down and give everybody a trigger, you know. Head and shoulders on the RSIs, 2 hour. I think 2 hours is going to keep coming on down. Oh, what it's supposed to say bearish. What am I doing? Bearish. Yeah, we'll leave that. That's fine. 2 hour bearish up to 5 o'clock. So for the next hour, yeah, we got an opportunity to find a short. You know, if we can find something that's happening right now. 1 hour, yeah, bearish, 30-minute. Oh, we do like this 30-minute for a bear. Okay, 15. 15's made its move. We would not jump in a trade unless we can get some kind of VWAP coming up and then like VWAP back down to push this blue, you know, keep the blue from coming up any higher. If this VWAP comes up happily and then we just kind of get a nice blue wave coming up, that's not something we want to short. We want the VWAP to come up and then like give us something like this, you know, like right here. Of course, it's got to be after a dip. Yeah, it's, you know, something like this. So came down, came up, VWAP came down, came up. I don't know. That's not the best example. But we're not taking a short here. The 1 hour looks bearish all the way to 12. But the lower time frame's got to give us something to work with. Yeah, that's pretty bearish though. All right, so at this point, let's see if price action gives us any clue as to support and resistance that we could play off of. We know we're bearish, high to mid. Well, high to low time frames bearish, but lower's got to give us something we can work with. Here's kind of some resistance up here. Kind of trending up this way. Okay. So, you know, mapping out some local action. So, you know, if price could maybe pop up here and then there's our bear play. Or Price could sweep here. There's our bull play. Either way, we need price to get beyond one of these two lines here. So typically what we would do is set some alerts. So we could come here. Well, probably because we're in replay, we don't have the option, but we would set an alert up here, set an alert down here. We don't care which one alerts us, but we just need some alerts to know it's time to find out what the charts are looking like again. That's all. There's no trade to take right now. Fast. Okay, alert. So alert was triggered. Let's give 5 minutes to get to our computer. Okay, we're back at our computer. Has anything really changed? Yeah, look, that VWAP came up and then rejected, and then she went lower. That's, you know, that's the kind of bearish activity that we can get behind. 6 minute, 4 minute. Oh, that was a nice trigger. Right here. You know, 11 points, 3 points. The move hasn't happened. It's thinking about it. We need, so we're watching. Now we're in front of our computers because we got an alert. And now we're going to spend some time. We're going to watch. If we can close some 5 minutes down here, we need to see some close in action. Then we can take it a little more seriously. Okay, 5 minute closed. Now, got an opportunity here to like hop in this trade, set a very casual stop loss up here, 23 ticks, and you know, a take profit down here, and then or a TP1 at least, and you know, maybe she can even get down here. But let's examine. We are pretty low, which it's so deep, it's typically expected that price will continue to push down. So folks, I like it, and we're about to trade it. We are about to trade it. We got an alert, we got a candle close. Now we just need an entry. The 1 minute was kind of telling the story up here. See how much these are split? If it was strong, they would stay close together going up. Instead, they got stronger when they was coming down. So that indicates the downward move is going to be strong. So this was a nice entry here off the 1 minute. But we still like this trade. I mean, we're only talking about putting 400 at risk, you know. We're about to take this trade, folks. So we're at 5 p.m. I haven't committed, by the way. I'm just saying, let me get things lined up, and we're going to really consider going short here for a scalp. All right, let's see what we got here. So we are at Monday. We're way over here. $1,700. Boom. And we're moving. Let's move an hour at a time so we can get there. Look at that. Oh, folks, wait a second. Oh, yeah, no. This is, yeah. Look, I'm just going to say this, though. We have to remember to look at these trend lines as well. These trend lines are not marked out over in TradingView for a reason, which we could mark them out on TradingView so we wouldn't have to come over here and look at these. But there's a reason, and it has to do with we don't want any spoiler alerts. I have to go to the higher time frames and look at the candles on TradingView. But a lot of times when you look at higher time frames in TradingView while you're back testing, the candle will have the higher time frame move, and you kind of get a glimpse into the future. We don't want to cheat ourselves by seeing what the candle is going to do. So I'm not mapping it out in TradingView. Instead, I'm using TradeZella, where you don't have that problem. Okay, we're almost there. I need to lower this to 2 minutes. All right. Where are we at? 1,700. Is that really 1,700? All right, here we go. 1703 basically. 1, 2, 3. Okay. I'd prefer to take the trade off of a trigger. You know, should we wait till, it can get up here and then we short from there, a place of strength? Not necessarily a checkbox in our trading plan, but it is something to take seriously. Well, I guess it is a checkbox in our trading plan. Entry criteria looks for whether or not lower time frames aligned for momentum, which is supposed to mean, you're waiting for these little triggers, trigger, enter short. We're, okay. This is supposed to be red, for goodness gracious. Okay, we're focused. 503. Okay, that's kind of what I think is going on. I think she could get down here. Maybe even one of these. Or maybe one of these. Or maybe one of these. We shall see. We shall see. Okay. Okay, here's where I'm at. Is do I want to wait for the 1 minute to give us some kind of trigger? This is where the 30-second, 15-second, 10-second is really helpful too, because we could kind of see on those what the money flow's doing. But when you're back testing, you cannot look at those in replay, in bar replay mode on TradingView. They don't let you go that deep. I mean, we should at least wait to see what she's gonna do right here. I'm giving it a couple of more minutes. I mean, in real life, we would have to give it. It would just be, it doesn't wait for you. You know, 5 minutes would have passed by anyways in real life. We got the little VWAP move that we're looking for here. Yep, we're gonna jump in. We're gonna short the bottom, folks. We are gonna short the bottom. 5-11, 17-11. There it is. And let's see. Hold on. Somebody might want to get me food. I'm also replying to a community member. Folks, it's pretty exciting. I'm getting some activity. I've posted, this is video number 6. And I'm getting some people responding here. Okay. Thanks for bearing with me, folks. All right. How do I feel right now? I do know one thing. You can't just interrupt taking a trade in real life. See, it just hung out there for us, waiting for our decision. you know, we got to give it a couple minutes, at least two. Yeah, I know. But that's what happens in real life. We're still going to take it. I think. Gosh, it'd be nice to get a push up first, though, wouldn't it? Yeah, we're still going to take it because we have high to low confluence. You know, we're gonna risk a little bit here, about 600. We're gonna expect her to push through this support right here as well. We're taking it. 1713. There it is, 1713. All right. Going in, buying two. We did it. Do we have a trading journal yet? No, we don't. Folks, we're shorting the bottom a little bit here. And, you know, I think we can get a little something here. But we're going to have to watch her closely, you know. I mean, it would be amazing, but I think we can get pretty low. TP1 anywhere between here and here. Have to take it seriously. Okay. Stop loss. Muy importante. We'll risk 640. I like that. All right. Now, 25.53.2. Entry at 25.50. Wow, 25.53.2. Short. There it is, 25.50. 25.53.2. Here's our stop. And take profit is just relative. We don't necessarily, we wait on MarketCipher exit criteria to take profit around here. Now, see what we got. Let's see what we got. Okay. I want a journal, and I'm going to need a screenshot or two. Here's our 5. This is why we're getting in the trade. We have high to low bearish confluence. And we had an alert. We got closure of even like a 15-minute under here. So that's bearish enough for me, folks. I'm going to give her a shot. I'm going to give her a shot. I really need to hotkey my trading or my screenshot thing for Mac. Yeah, I sure do. Because right now I have to hit, you know, what, like control. Oh, look, I got a reply from. You may have enabled the full screen note option. Oh wait, no, that was old news. The trades will now list on the bottom of the page underneath the charts. You can tag journal these trades by clicking on the journal book. Really? I missed that update. I didn't realize, we had an update. I don't know what this man is talking about. Below the charts. I mean, you think you could like circle it for me? What are we doing here? Hold on. What is he talking about? Below the chart. So this is below. Closed positions. Open positions. Oh, the little journal icon. All right, hold on. Get out the way. Open positions. Oh, look, there it is. Let's go. Oh, that's great. Playbooks, notes. Okay. Okay, that's great. Yeah. Cool. I didn't expect to hear back from them until Monday. So that's a nice surprise. And right on time. As soon as we wanted to journal, he just pops up with the answer. That's awesome. Shout out TradeZella, man. TradeZella is just so important. Did I go short or long? Oh no. I took a buy. I took a buy order. Oh crap. Okay, well this is simple. I'm just going to cancel accident. This is supposed to have been a sell order, not buy. Okay. And that's that, folks. Close this. That's wild. And that has happened before. That has happened before. I got a lot of things I'm juggling right now. Close position. Yeah, close it all. All right. So there's no harm, no foul. It does make it look like we took a extra trade today. But It's zero unrealized. Really, it would be like a negative $20, maybe a negative $10 for fees. That's kind of negligent, but you know, it's actually not the first time that's happened in this trading series. I got one somewhere in the beginning. I did the same thing. There it is. Yeah, my third trade. All right, cool. So we are now going to sell. That's what it should have been. There it is. 53.2. And take profit, which is all the way down here. Okay, cool. All right. Glad we cleared that up. Sheesh. Journal. -2. I did take a sell, so open position. Journal. Here we go. Okay. We got high to low alignment. Let's say emotions are, you know, I'm peaceful. It's kind of speaking to me. You know, it spoke to me. I'm actually pretty confident we're gonna. Yeah. Feeling pretty good. High to low, mid. Low's looking good, yeah. The 15, okay, the 15. Yeah, I mean, it's all heading the direction we want it to. It's aligned, all of the above. Yep, after a support or a trend line, yep. In this case, a resistance. And yeah, this is a line on the 3, on the 5. We're aligned. This is looking, it's looking like a good, we got a defensive, do we have a defensive stop? It's got to be behind some defense. Not, I mean, it's behind this moving average. Up here would be more defensive. We could risk 1,000. Give it some room to play out. But I'm not, I think this is good enough. We're using the moving average on the 5. We're using it as a, you see how it's kind of like its own form of confluence. That's okay. It's not floating out in no man's land like the middle of a candle, like we did a few trades back in the middle of this candle here. That's completely defenseless. So let's see. I'm ready to see what's going to happen. I don't know about y'all, but I cannot wait. Really looking forward to this. Really looking forward to this. Okay, we did that. These are exit criteria, so we're good there. Notes. I got the screenshot. Entry thoughts. During. Oh, wait, this is post. most trade thoughts. Entry thoughts. Looks clear that high to low are bearish. Larger bull trend still in play with higher time frame money flow. So the bulls are still there, but we need to pull back, and we are taking advantage of that. That's the idea. What else are we considering here for this journal? Let's say, you know, we found a local SR, set some alerts, then waited on a breakout from so a 15-minute has closed below. So, oh, I got somebody. Hold on a second. Let me get this link for someone. Just going to join the stream here.
What's up, you guys?
Oops. Sorry, Lonnie. Trying to get to my video. How do I? Here we go. Share, copy link. I think this will work. Okay. Done and done. All right. We're about to take this trade. I mean, we're already in it. We just spent the last hour looking for a trade. We found an opportunity to take a short. We're hoping we didn't get in too late. Because it looks like she's already made some move, but we're kind of expecting price to move a little bit lower. We're not asking for much. Let's look at the chart. So here it is. We broke out of this kind of like ascending triangle. We found like some local support resistance. It got below, started closing 5-minute candles. We jumped in the trade based off of some MarketCipher confluence. We think we got a shot here. So I just need to add a 5-minute screenshot to the journal. And then we can let it play. Expecting a little bit of turbulence, hopefully not much. Looking for mid time frames to carry us lower. All right. Not expecting a lot. Prepare to trail stop loss closely. If you know, with any power move. Okay. All right. There it is, folks. Journaled up. Moment of truth. Let's let it play out here. I want her to stay below. Open for another bearish trigger. Something like that. We're getting to this support area here where some buyers could show up. Close a 5, baby. Yeah, close the 5. So see, we've already waited in real life. This was 10 after 5 o'clock, so 5:10 to 1800. Here's the 1810. You know, it's been 3 hours. So I mean, we're playing video games. We are, watching TV, doing chores around the house. We were down. We were even down 300, over 400 bucks, about $400 in the red for the entire first hour. Was first 45 minutes was just in the red. So, I didn't want to wait to see if it would do a retest. I just went for it. It's why we have a tight stop loss. This thing could still snap back. I mean, look at all these green dots. We're looking at this money flow. The RSIs are tightening up. Let's see what the 1 minute has for us. Oh, 1 minute. It's kind of got this slingshot pattern. That concerns me a little bit. The 15. The 15 makes me happy. So 15 to, let's see, 615, maybe even 630. Continued downtrend. I'm all right with that. We don't want any spikes. We just got to survive any random spikes. Hopefully that support turns to resistance. Oh, yes. Yes, indeed. All right, we need to consider taking a profit. I mean, we're probably at about $1,000. Consider taking a profit. Oh man, we're so deep. We are deep, folks. I'm not taking any profit. I'm not. I think there's gonna be a little turbulence, but I'm looking for more downside. We're gonna watch the 1 minute. So we're playing it close. Money flow's starting to creep in there. We need a hammer. There's a hammer. All right. Let me get a good look at this chart here. Here's where we pumped before. We're back there. I have to take a profit. I have to take some off the table. It's just the responsible thing to do. If I was trading millions, if I was trading 10 to 20 contracts, and I'm a day trader, and I just spent the better part of almost 2 hours. Why did I say 3 hours earlier? What was I thinking? Oh, no, I didn't say 3 hours. I said like 45 minutes, which was true. We were in the red starting to trade for like a good 30 to 45 minutes. We were $1,000 up, back to being $200 up. So we watched it go from 1,000 to 200, back to about 1,300. All of this playing out in the course of about 2 hours. We're going to journal that, by the way, because that needs to be in our notes. From 1 hour to the second hour, if we're watching it in slow motion in real time, can we stomach the fact that we were $1,000 in profit and 20 minutes later only 200 in profit? Because that's the kind of reality we have to live with long enough to let the time frames in the mid and higher play out some more. Now we are at a key level based on our plan here. We took a long here before, so for us not to take profit would be a little unprofessional based on my strategy. So you do you. I'm taking some profit right here at 1851. 1851. 1851. Let me fast forward to 1851. Do it by 5 minutes. For 1 minute. Boom. Let's see. Okay. Had to message a friend here. Okay, so where are we at, folks? We're $1,000 in profit, and we're about to take half off the table. We're taking half off the table, and we're moving our stop loss. We're definitely moving our stop loss into some profit here. Let's say, say 340. We're locking in 340. Let's go to the 5-minute. And in fact, I'm going behind this 5-minute. I'm not here to play around with these people. 560 locked in, and I'm taking, well, this is gonna get cut in half once I take half of the profit. So let me do that. I am buying one back because I'm selling two right now. So I'm gonna buy one back, take half off the table. It's like that, y'all. And we're locked in for another $280, and we're gonna let it ride because we haven't got exit criteria. We have not seen exit criteria yet. Well, that's kind of some exit criteria right there, but she's still bearish. This is not reversed. The exit criteria says 15-minute reverses. This thing is just getting started. The 1 hour from 6 to 7. Oh, it's only 15 more minutes. Well, she might retrace a little bit here. What did I move my stop to? I think I moved my stop to behind this candle here, which I can't see for crap because of this. All right, what is it? Stops at 25.47.2. 25.47.2. All right, just know it's 25.47.2. Don't play with me. You know. All right, 25.47.2. There we go. That's our stop loss in the profit. We are looking for this thing to really just keep on dumping. You know, I think she's going to have some kind of like retracement. We just don't want it to be where it's got to retrace up here. But I think the dump is coming. More dump to come here, folks. Fast forwarding. See what we get. 5 minutes kind of. Yes, I thought she wanted to pump, but the bears said, no way, no how. Now listen, we're moving our stop down. We're trailing the 5-minute closely here, folks. Trailing the 5-minute closely, 25.45.9. Let me check the 3 and the 2 and the 1. We're gonna watch the 1. We're gonna have to exit on the 1 at this point because the 5 is looking like she could pump. Yeah, am I gonna let them chase me out? Because there's more to give here. There's some more downside. Oh, we got snake eyes on the 15. Yeah, she's gonna pump. I'm gonna give her 2 more minutes and then I'm out. 2 more minute real-time penalty. I'm out. I'm out. I'm out. I'm out. I'm out. I'm out at 1937. All right. It's another 680 profit. There it is. I'm out. I am out, folks. I am out. So we took this short right here. Two-hour trade, about 90 ticks. I mean, let's see. There it is. Well, we got in a stop loss up here. There it is. So that's our trade. We took a swing at it. And let me get a screenshot going. During trade, we were sat in the red almost immediately for the better part. I don't need to use these words like that. Trade was in the red for the first 35, 40 minutes. Dump happened quickly afterwards. Was what else did we think? We thought the 5 minute, the 5-3 minute, getting a lot of, anchor green dots. I didn't lose confidence because 15, okay, we can say that on another dot. Say, yeah, in fact, I can put that, this can be 5-minute chart. This can be 15-minute chart. There we go. Okay. Getting the journal in. That was a great trade, folks. That was a great trade. I want a picture of the 15. Just MarketCipher. Where's our entry? There we go. Beautiful. I mean, just absolutely beautiful trade. Wow, that felt very, very good. Post-trade thoughts, beautiful. It felt really good taking this trade. We looked at the environment, made a plan, waited for our alerts, waited for a breakout closure of 5-minute, 15-minute, took the trade with a defensive stop loss. You folks, you can't ask for much more. You know what I'm saying? MarketCipher aligned high to low. We knew that all the time frames aligned, we were bearish. So we made a plan. Because just because we're bearish don't mean you just take the trade. We wait for an entry. We wait for some entry criteria. And we found it. And we took a swing. And we are up, folks. We are up. So, you know, we took these 3 L's right here, and then we took 3 bangers right here. So, you know, what you gonna do? Let's have a look. Let's have a look now at TradeZella dashboard. All right. We're at some all-time highs for profit. Made it to trade 36. In the green for the week. We're in the green for the week. Our TradeZella score is increasing. You know, if I didn't have such a bad start, and this was just like a slope all the way up to here, I think my TradeZella score would be a lot better. I think the max drawdown recovery factor, this is what's really hurting that score. They want to see that I can double, triple, quadruple my biggest losses. My profits need to outweigh it, not a 1-to-1, but a 1-to-5, you know what I mean? And then I think that score gets really improved, and then my web can. But look at this, consistency, 84, win, 83. Well, I guess 84 score. Oh yeah, I get 83 points. So I guess having a 50% win rate is a very good thing. Consistency, 0.84. I'm getting 84 points for consistency. I mean, really good. Consistency and winning. Profit factor could be better, and I think this affects my profit factor as well. I mean, it's just pulling me down. I'm going to need a lot more data to really bring this up. I mean, this is only for the month. It's my first time really taking a crack at this. I mean, I could do another month after August and then just be red every week. I don't know. We need data to prove that my strategy and my trading plan and my mindset has what it takes. But we can definitely see beautiful increasing slope. I was losing a lot more when I started than I am now. I'm taking much smaller losses. My wins, I'm taking pretty big bags. Pretty big bags. This is daily. Is that daily? Yeah, that's, goodness gracious. 5,700 there, 4,000 there. Where's that $4,000? Right there. Yeesh. Yeah. Folks, we have 1, 2, 3, 4 trading days left in August. 98, almost $9,900 in profit. Find out next time when CMZTrades